Whether you're looking at building a portfolio of long-term rentals or invest in short-term rentals, it's important to understand all of your different financing options, particularly when interest rates are up at the 6 or 7% level as they are right now. I'm David, a realtor, as well as a real estate investor in Sonoma County. And today I'll be sharing my top tips for financing investment properties in this area. With median sales prices ranging from $700,000 in northwest Santa Rosa to $1.1 million in Healdsburg and as much as $1.3 million in Bodega Bay, coming up with enough capital to purchase rentals here can be challenging, but the rewards of rental income are well worth it. Over 75% of millionaires have made their wealth through real estate investing, according to research by House Cash In. So how can you secure funding and start building your rental property portfolio across Sonoma County in cities like Santa Rosa, Petaluma, and Healdsburg, where I'm based? So here are my key recommendations. First, you need a sizable down payment, ideally 20 to 30% of the actual purchase price. Given median prices in the county, according to MLS data, are $800,000, I know that seems unattainable, but there are creative ways to bridge the gap through retirement account loans, real estate partnerships, and lots more. This equity up front gets you the best interest rates, as well as loan terms. It also provides a financial buffer for those unexpected repairs and maintenance costs that come with managing rentals. Next, you need to aim for a credit score above 700 if possible. Taking the time to clean up your credit and reduce debts will pay off tremendously in thousands of dollars of interest savings over the life of an investment property. One of the things that often catches people out is changing jobs, which can really mess things up for you. I had a client recently who was a wealth manager, and she sold her company and got some money up front, so she had a good down payment. But then the fact that she had changed jobs meant that the rate she got was at least 1.5 points worse than it should have been. So now let's discuss the loan products themselves. While 30-year fixed rate mortgages are common, a lot of people dismiss conventional loans for investment properties. However, I wouldn't totally write off conventional 30-year fixed loans. You can have up to 10 conventional loans at a time on 1 to 4 unit properties, including your primary and any secondary homes that you have. The key is to find a trusted lender to explore all the different avenues open to you, including interest-only loans, ARMs, bridge loans, or hard money loans from private lenders. The right product depends on your investment timeline, depends on your risk appetite, and also the target property. For example, some properties, they might only qualify for hard money if it's a major fixer or won't pass an appraisal because it doesn't have a heat source, for example. That being said, there are always creative ways that we can navigate particularly difficult properties. For example, it is sometimes possible for a lender to apply and get an appraisal waiver for certain types of properties, which can remove a major headache. DSCR loans, or debt service coverage ratio loans, are loans that qualify on the property's income, or rather cash flow, not on your own income. They're attractive because they don't count towards the 10 conventional loan limit, yet they can be 30-year fixed loans. Qualify, your income's not considered, but the potential income from the property is what's important. The theory is the property can pay and cover the debt itself. I have a client find a good balance with a DSCR loan that is fixed 30 years, but interest only for 10 years, and then amortized over the last 20, which helps with day one cash flows. For this type of loan, you would typically require 25% or more as a down payment. In my experience, connecting with a local mortgage broker who specializes in financing investment properties is invaluable. We work hand in hand with a number of local lenders who can come up with creative solutions for financing clients, because we know where to find properties that will make good investments. Local banks are also a great source for investment loans because they know the intricacies of the local markets and have just got different underwriting standards, and and are flexible since they often hold the notes in the portfolio. Local banks that I would consider here are Redwood Credit Union, Community First Credit Union, Summit State Bank, Poppy Bank, and Exchange Bank. I mean, those are just some of the local banks who are good sources of financing. Finally, you need to be realistic about the numbers. You need to carefully analyze the potential returns, the rents, and run the numbers to forecast your cash flow, the debt coverage ratio, and the overall return on investment. I mean, I'd be lying if I said it was easy to find gross yields in the range 5 to 10%, because it's just not. A gross yield of 5% is possible, but it's getting tougher. I mean, we've had quite a few clients recently purchasing single-family homes with an ADU, which just helps make the numbers work a lot better. While there is no magic solution to finding properties that will work, I mean, one rule of thumb you can use is to make sure that, as an absolute minimum, the rent is equal to or more than 0.5% of the purchase price. For example, for $1 million property, you need an absolute minimum rent of $5,000 per month. When you consider this scenario, you can see why homes with ADUs will stand a better chance of making financial sense, because for a 600 square foot ADU, you can get $1,500 to $2,500 per month, which helps you on your way to your target income. For investors who have an appetite for more active involvement and as well as choppier income, then vacation rentals are another really interesting route to go. If you are interested in exploring the pros and cons of long-term versus short-term rentals, or something in between, then take a look at my video on this subject. I'll put a link in the description below. As with any investment, it's important to go into it with eyes wide open, so make sure you've established a clear goal and built a business plan that takes into account every line item, all of the income, as well as all of the expenses, including, appreciation, depreciation, all the financing terms, and everything else. I expect over the next 12 months and beyond, there could be some really good opportunities for the smart investor who knows how to identify value in different pockets in Sonoma County. I get calls all the time from people looking to invest in properties in Healdsburg, Windsor, Santa Rosa, and all over Sonoma County. So reach out to me if you are looking at your property investment options in Sonoma County. My number's in the description below. If you enjoyed this video, I'm sure you'll love the next one on screen right now. Until the next video, go well.